The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And as you probably realize, we've got a big sell-off going on in the market, continuing down from what we started last week. We have a probability of the vote coming out from the Supreme Court today on Obamacare, and my inside sources tell me that it's going to be 6-3 against. Now, realize that they have never been right yet. So just keep that in mind. Now, what I just did is I posted into the Tiger TV a chart of the 15-minute crude oil chart going back over the last couple of days. And the reason why I'm doing that is to show you, how we do trade setups. And what we're watching here is this 786 retracement down here at this 78.21 as a potential buy. And the reason why we're doing that is that, there's the gasoline futures have made the bullish butterfly pattern on the downside, and so we believe that crude oil is going to hold this 77 level. So that's why we're watching it really, really closely. Here you don't have to risk too much, not more than 60 cents or so in crude oil, but that's just one of the things that we're watching as far as just learning how to put on trades and stuff. Sometimes they don't work. The one that we did last night that we've been talking about we talked about it last week was the dollar versus the yen. It went right up to the 1.618 at that 80.50 level, made a 3 drive to a top pattern, and has now dropped well over 100 pips in a matter of just a very very short period of time. I will show the gasoline chart. I put it into the newsletter, of course, but I will show the gasoline chart in just a sec. Well, I might as well do it right now since we're talking about it, and you'll see that it has made a really nice butterfly pattern on the bottom, and if this is in fact the bottom, and it is actually up on the day today, whereas crude oil is still down. So this is the reason why I'm looking at it. There's another reason, too, and that is that the grain markets are absolutely going ballistic to the upside. We have corn up the limit, soybeans up the limit, wheat almost up the limit, and this is mainly because of the bad weather that we thought that might be coming down the road. And, in fact, it has come. And, like we mentioned about this, it's hardly ever a year. In fact, I've never seen a year go by that you don't have at least 1 or 2 crop scares. And, we're not even into July yet. So this is going to be an interesting year no matter what. But it's the first limit update we've had in corn in a very, very long time. And so with that much, on the upside, if hedge funds are long these things, they certainly, they don't have to liquidate crude oil contracts for margin problems, and that's another reason, why the risk here might be small. Now, that might be a very unique way of looking at it, but, that's just the way that I'm looking at it. And since this is my radio show, I thought I'd throw that in. That's all I can tell you. Okay, now we want to talk a little bit about the stock market because, we went up last week right into the that full moon and new moon cycle that we've been watching, for a long time. It looks like it's, going back to, the way it used to be. And I'll try to see if I can get that to go into the Tiger TV where it shows the full moons and new moon cycles and the 2 eclipses that we had on May the 20th and June the 4th. And then we have the big one, the next new moon on the 19th. And the reason why that is important is, you remember when Tom Pelk did his work, going back 88 years in the S&P using the new moons and full moons, is that you buy on the new moon and sell on a full moon in bear markets, in bull markets. But if you're in a bear market, you want to sell on a new moon and buy on the full moon. And so this is what I think we're in now. We're in a bear market. So if you would have bought on the full moon of June the 4th, we were looking for the June 6th because that's when that P-index date came in, and that was the big update that we had. And now we've had a move where the market has gone up into the June 19th, and June 19th. And what's so important about that is that June 19th was an exact 61% retracement from the high that we made back on May the 1st. And so this is this is a very, very important day on May the 1st, and then also on June 19th because of the fact that you have this 61% retracement. Now that would be important all by itself with the S&P, but you had the same thing happen in the Dow Jones Industrials. It made the 61% retracement. You had the Russell 2000 make the 61% retracement, and you had the NASDAQ make the 61% retracement. So all indices were making 61% retracements coming into that the new moon on the 19th. So this is what we want to be watching. Now, one of the things that I'm going to cover next is the gold market, because gold and silver, because I really believe that we're getting very, very close to some type of a major turn here in the gold and silver. Whether it's related to these commodities or not, I'm not sure, but it's going to be very difficult for gold and silver to go down if we get if we get weather markets these weather markets keep going, which they certainly can, because prices of food are going to get absolutely astronomical, and that's going to have a bad effect on inflation. And gold and silver respond relatively well to inflation. Now silver is down, testing the 61% retracement, I believe, I believe this is going to be the third or fourth time. Actually, on the weekly basis, it's tested it. It's been down here for it's below the 61% retracement, but we've had higher bottoms all along in here in the silver market. So it's actually held up, a little bit better than it usually does. And so we're going to see if it's going to continue to hold this level at this $26 per ounce level. Now, in gold, it's much easier to see because we've hit that 61% retracement at $1,520 per ounce 6 times, and we have moved away from it. Last week, we had a big sell-off in gold. It's held up relatively well so far this week. I mean, it's only one day into the week, but this is what we're looking at, and we'll see if it has a chance to go any higher. But we need to get gold above $1,630 per ounce, to get it started. And if it does, then you could get these markets, moving in a direction that could take them, a great deal higher. This bear market that we've had in silver has been, very, very orderly. I mean, each of the highs that it's made after we made the high on April the 25th came in at 61% retracements. These were exact numbers. The first one came in at $44 per ounce. Then we went all the way down into September to $25. Then we rallied up over the next 5 or 6 months into the next 61% retracement that came in at $37 per ounce. And now we've come down, I believe, it's been 3 months straight down in silver, so it's incredibly oversold. So this is the area where I believe we're going to have a pretty good pop here in the silver market to the upside. But if it gets below 26, it certainly looks like it's going to have not have many friends at all, and then I would assume that we would be going down far lower than that. We will cover in depth the bond market after the break, but frankly I really want to spend a little bit more time talking about the stock market and also the euro, because the euro and the stock market seem to be hooked onto the hip, and we are very, very close to making a 61% retracement in the euro from our low that we made back on June the 4th. Most people will not be watching that particular pullback, but I think it's necessary to in order to determine whether the market is going to hold that at that time. But we will get an idea here in the next, I imagine it'll be the next few hours or so, because we are very, very close to a 61% retracement off of our early June low. We've missed it by about 7 or 8 pips so far, and that number comes in at 124.65 in the euro. So we need to watch that, very, very closely. We're down 5 days in a row now in the euro. It does make it a bullish Gartley if you drew it as to the highs and lows off of the June low. It makes almost like a double top, and we're coming down almost to a perfect Gartley buy pattern here at 124.65. So that's one of the things that that in fact we're watching very, very closely. Now, as we talked about earlier, the trade of the week in the newsletter this week was to sell the dollar versus the yen at buy the dollar yen at 80.50. That means you're selling the Japanese yen, and it has dropped a lot. It's dropped over 100 pips, overnight from, Sunday night when it got to 80.56, and we got down to 79.45 so early. So this happened Sunday night. We're going to find out if this is going to be a place to hold this. Now, one of the things that we're going to have to talk about also is the dollar index, because we have been watching that huge AB equals CD form, and it did make a beautiful pattern down there just the other day. Then we've been talking about this forming, and it did form. And really what we're watching now is to see if in fact that we are going to get another move that is going to take us to the level of, if we can get above this 84 level. But frankly, I don't think so, because the high today that we made in the dollar index was a perfect 61% retracement. Now, that's exactly what you want to be looking at if you're following the euro, because it couldn't get higher than that last night, and if it was really bad, it should have really blown through the the 83 level, and we can only get to the 82.70. Now, that's not much in the dollar index, but it's enough to pay attention to it, because it gives you an idea of what the euro is doing. So my assumption is that we're bottoming here in the euro, and we still have a little bit more to go to the downside in the dollar index. And from there, we'll go to the next level. But we have a very strong probability of having a major correction in the dollar yen, because there's a huge ABCD pattern that occurred there. And Steve Rhodes has been talking about, and Tom also talking about buying the dollar yen at the 73 level, which it's hit, and they had the huge moves up, and they've traded it twice against. They've traded it with the numbers just absolutely perfectly, because it's made beautiful patterns of ABCDs and coming in at the 61% retracements on the downside, and then making expansions of 1.618 on the upside. So that's why the Forex is by far the best market to trade, in my opinion, because it trades 24 hours a day, 5 days a week. And no other markets have that kind of liquidity. We got to pay a few bills now for our vacationing hero, Tom O'Brien. 877-927-6648 if you have any questions.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648. And since we were talking about the corn market, someone asked me to put up the corn chart just to show you what's happening, because it's a very unusual day when corn actually hits the 40-cent trading limit. This is December corn, and we are actually trading up another 6 or 7 cents above the limit. And the way they do that is when you're trading futures like corn and soybeans, and in fact any future, the nearest option usually does not have a limit, plus the options on the corn. In other words, if you have a option on December corn, it does not have a limit. In other words, it can literally go $2 higher, $3 higher, or something like that. I remember, give you a history. I'll get on my soapbox for just a second, because I happened to be involved in this trade back in I believe it was around around 72 or 73. I happened to be long some July corn, and I'd forgotten. I had just one contract, and it came into delivery, and they had Bunge Grain, which is one of the larger exporters of grain. They were incredibly short the corn. They had to buy it back at any price, and it was the last trading day, and as I recall, the corn opened up 75 cents a bushel, which was $3,750. And my broker and I, we were so excited, to get out at that price. And no sooner did we get the fill back than corn actually went another dollar. It went another $5,000 a bushel higher. This was a case where a grain company got caught on the wrong side, and they had them the wrong way, and they made them pay the price. And that remembers the old saying from Daniel Drew way back in the 1900s when he finally trapped one of the Vanderbilt. He finally trapped Cornelius Vanderbilt in a short position, and he said to him, "He that sells what isn't his'n must buy it back or go to prison." But now we have, too big to fail things, so none of that stuff really means anything anymore. But at the time, those were men that, paid the bills as they came due. But now, the banks just run to the Fed if they have any trouble. And that's just a different ball game now. So I'm going to get off of my soapbox now, and we're going to talk about the bond market. We'll start with the Treasury bonds, and we'll probably get up to the break on the bonds, and then we want to go to the notes because I think we have some really important things happening here because the market, in Treasury bonds has barely moved a point today, with the Dow Jones being down well over 100 and some points. And so this is why I think it's important that the market is not responding to good news like it usually does, and that's the key here. And if the market responds to good news, that's okay. But if it doesn't respond to good news, that's telling you that you're looking at a market that is very tired and doesn't want to go anymore. That's the primary reason. Now, remember, just as an analogy, do you remember when Apple was on its way to $1,000 a share when it was trading at $640 or something like that? Do you remember all the news that was coming out on Apple? They had a 94% increase in earnings, and they had $150 trillion in cash. Or 150 billion. It was one of those two numbers. I lose track of the zeros. But you've got to watch how a market responds to the news, because if the news is really bullish and the stock or commodity doesn't go up, it only has one place to go, folks, and that's gravity will pull it down. That doesn't make any difference whether it's corn or soybeans or Apple or Google or anything else. If the news is really good and the stock doesn't go up, somebody knows something and they are willing to sell into all that good news. So that's a very important piece of information. If you remember, we already know these things, so I shouldn't bring up all the stuff that I'm looking at, but this is just something for just common sense. Jesse Livermore, in his book Reminiscences of a Stock Operator, talked about that a great deal, and that's in fact something that you got to watch. How these markets react to the news. It's very, very important, especially with all the news that we have now, because we have instantaneous news. I mean, we have Bloomberg, and we have CNBC, and we've got the Financial Times and Reuters and Knight Ridder, plus all the private ones. And these people have good access of information, so you have to see how the markets respond to these things. I mean, look at the crude oil, perfect example. They're talking about Iranian having a nuclear war and all this stuff, and there's not going to be any oil. And what does oil do? It goes from $106 up at the 786 all the way down to the 786. It drops $30 a barrel, and that's the way they write about it in Abu Dhabi. 877-927-6648 if you have any questions.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648. And we're going to keep talking about the interest rate market. We just finished with the Treasury bonds, and we talked about how the bonds are not responding, to the news of the market going down. They're hardly having any of a rally. And if you'll go into Tiger TV and take a look at the Treasury notes, you'll see that they are also, but they are even weaker, than the Treasury bonds themselves. So it's telling us that we might have made this major top that we believe occurred in the Treasury bond market. That's what we think has happened, and we'll know more about it as we get through this cycle that we're going through now. Now we have this Venus influence, this retrograde Venus influence that we talked about several weeks ago, and it was something that it was brought to attention by one of the subscribers for TFNN, Bob Lemon, and he had a really good really good analogy of showing how the Venus retrograde motion showed that there's a lot of volatility increasing during that time, and we're coming up to the 27th of the month, which is the end part of that, and I'm expecting even more volatility, after that comes up. Now, someone asked me the question of what I think is going to happen to the stock market because of the inversion that we had in the Bradley model on the 19th and 20th. All I think we're doing now is we're just making a normal pullback here. I believe that we're going to be going just probably chopping with an upward bias into July, and probably the end of July, early August is where I think is going to be the big place that could be the biggest. One of the best opportunities we've seen in a long time if it fulfills. But remember, we're 5 weeks away from that, and I don't want to make too big of a prediction on it. But the Bradley model has already started to turn up in late June, and so that gives us the probability that it should be up a little bit. And it doesn't mean it's going to make new highs or anything. And the fact that the way that it came off on the 19th, tells us that might be the high, and we might try it one more time as we go backwards and forwards. But the market is not afraid of anything. It's trading normally. The VIX index is just basically doing what it's been doing all along. We've had a tremendous move in the VIX index, off of that ABCD that we talked about. In fact, I put that in the newsletter last week as the trade of the week, and it went right down to that 17 level, and has had a pretty big move here in the last couple of days, and so I don't know if it's going to continue up or not, but at least some type of a major bottom has occurred here in the VIX index, and that means that if it keeps going like it should, is we have a bearish bias in stocks, but it's still, we're looking at these over, daily periods now, folks. We're not trying to make a prediction for 7 or 8 months. We're trying to look at this market on a little bit shorter time frame so we don't have to risk an arm and a leg. That's why the importance of that new moon that came in on the 19th with the Gartley sell pattern. If you get a chance to take a look at the newsletter, you'll see I put all of those Gartley patterns in the charts to show you that each one of them was exactly a Fibonacci retracement off of the previous highs back in May, and almost every one of them was 618. What I believe the Dow Jones made a tiny bit higher high, but not by much. It was less than 1%. So all of these patterns and cycles have come together, much like we were thinking they were going to, but we'll have to see. The biggest problem that I had is that I was really surprised that we didn't bottom on the 20th. I really thought the 20th of June, 19th to 20th, that new moon would be a bottom, but in fact it is a bear market, so that new moon was a high and not a low. So we don't have another. We have the next full moon comes in, I believe, on July the 3rd, and that's over the weekend. The July 3rd holiday occurs in the middle of the week this time, so I'm not sure what day is going to be the holiday for July 4th. The fact is, I'm not even sure we still have a 4th of July holiday. I don't know if the president took that away or not. I'll have to double check that, but we'll wait and see. The big news this week, if in fact it does come out, will be the news from the Supreme Court is whether they will make Obamacare, a thing of the past, and if it does, then we're looking at something that is going to be very, very interesting, because the president would lose a lot of power. That's just my opinion, and what do I know? So who knows? Okay, we've got our first caller from Salem, Oregon. Are you there, Jim?
It's Kim, K-I-M.
Ah, well, then that's not my fault. The guy told me it was Jim. So
that's close enough. I've been called worse.
Hey, on the keyboard they're right next to each other, so he's made a typo. That's all he did.
Yeah.
What can I do for you, Kim?
Anyway, I've sent you a couple charts in the past, Larry, and do some of my own analysis. I was looking at the metals over the weekend, and just kind of timing stuff. And I've got a lot of cycles and projections lining up with around August 20th, primarily on silver. and I'm thinking that's going to be a low, frankly. I was just wondering if you had any Astro stuff that you've got plugged in that time zone, or is that too far out?
Yes, actually, for silver, I don't know if you know Jim Flanagan or not from GAN Educators. Well, anyway, he's done a really interesting 15-minute webinar on silver, and I'm looking at the same things that he's looking at, only in a little different format. He's the epitome of a GAN aficionado, and I respect his work as good as any. He sees pretty much what I see. If this silver can hold this 26 level, and gold can hold 15, 20, we got a chance here for these markets to have a pretty good rally, and they're certainly oversold by every stretch of the imagination, and we have not had any help with open interest or volume. So when the rally does come, if it does come, it's going to be pretty substantial. But Jim thinks that silver will lead the way. That's what his analysis is.
Well, I've got two timing windows I'm really looking at, and the first one was July 20th to 25th, and I'm thinking it could rally into that from here, maybe in the next day or two, or maybe bottom around July 3rd or something, and then rally into the 25th. But that August 20th, I'm pretty convinced. Well, these things invert and do all, and sometimes they don't do anything at all, but it certainly has a lot lining up on it, and I think it's going to be a low, and frankly, I think it's going to break this and get down to maybe closer to 21. Mm-hmm. The standard.
If it can easily go to 20 or 21 if it breaks the 26. Yeah. And we've had a lot of weakness, and the fact that it wasn't weak today sort of surprised me. And so, I'm just waiting. And my game plan here, Kim, is I'm waiting for the bottom to come in, and then what I'll do is I'll wait for the first Gartley pattern on an hourly chart after I think the bottom is in. So if we take out the lows by just a little bit and then rally, or if this is the low, I'll look at the first pullback and try to buy that. That's what I'll be looking to do.
Well, what you should do, Larry, is write it on your calendar, August 20th, and if I'm right, you can go sailing with me.
I will take you up on that.
All right.
As a matter of fact, Tom's out on his boat right now somewhere. I don't know where he's in South China Seas or wherever he is, but frankly, I'm a deathly fear of being out on a boat. So it's not something that I look forward to. Those of you that are new to Tiger TV, is that we have a bet. Tom thinks the bonds are going to go to 160, and I said if they go to 160, I said I'll go out on your boat. I didn't say that it had to be in the water, though. See, that's the stipulation that I have.
Yeah, well, you might be able to finagle your way out of that one. But
I'm going to do it no matter what. It might be the first bet that I renege on, but I certainly don't like the water or anything like that. So.
Okay, well, you have a good one. I just thought I'd check. So you don't really have Astro stuff lined up in that window?
I haven't looked out that far.
Okay.
I'm basically a shorter-term trader because I try to be risk-averse,
right,
and not really risk anything, and that's the main thing that I'm trying to do. And it's sometimes it's a little more difficult than others, but I am watching the silver mainly because I'm seeing the same thing that someone who is very, very influential in the markets like Jim Flanagan and has a great deal of experience. I know Jim personally, and his work is really very, very good. He has the best library as far as data.
Yeah.
Yes, because his thing is just it's just good. He does good with data, so that's why I watch it.
Yeah, I'm familiar with his stuff. I do have I have subscribed to him in the past, but currently I really don't subscribe to anyone. I just find it kind of sways my own thinking too much. But
I understand.
I do look at his webinars. He does do occasionally online for free. And I haven't seen this one you're talking about, but I guess I'll go see if I can find it. But he does have really good long-term data, and that's one. My data doesn't go back as far as his library. So.
Well, I was when he was in Claremont College when I first met him back in '78. When I was at Drexel, he started getting interested in the GAN stuff, and Twentyman told him that it was the best thing is to learn how to handle data. And frankly, that's what you have to do when you do that, is you have to learn what data is.
Yeah. All right. Well, thanks
for calling in, Kim.
Yeah.
I appreciate it.
Talk to you later.
You bet.
Bye-bye.
Okay, since we're on the precious metals, we want to take a look at the gold market because we talked about this triple bottom that occurred at the $22 per ounce level. That goes back to October of last year. We tested it in around Christmas time, and then we tested it again just back in May. And we had a pretty good rally, and then we've had a couple of sell-offs, and we've had 3 higher bottoms now that have occurred. And so far, this is what you want in a bull market. So, kind of keep an eye on gold and also on silver because they could be getting ready, to finally make a turn to the upside. Someone asked me a question about the grain markets. How much effect do they really have on the other commodities? And all I can tell you is, the corn market is our largest U.S. crop, followed by soybeans and wheat. And but that's a huge market. What it means is that these hedge funds, the commodity hedge funds that are in these markets, they have trend following systems, and so they most probably are long these things. And so they've been going up. We had that big AB equals CD buy pattern, in soybeans about 3.5 weeks ago, and they've already moved $10,000 a contract, and they've made new highs now in the November contract. So that means that these hedge funds are not on any problem as far as margin, to get out of these other things, and so that gives a bullish bias to just about everything. Okay, we got another caller from Jim in Florida. Are you there, Jim?
Yes, I am, Larry. I wanted to find out if you felt are you flat right now on the trade on the E-minis, or are you looking? No.
I'm not. No, we definitely. We were looking to sell that thing at that 1555 level, and it opened at 1355 level, on that Sunday night after the Greek, elections were so good. So we're looking, for the market to come down just a little bit more, probably down to that 1298 level, and that's what I'd be looking for. As far as where I think the first bottom, the 61% retracement of the low from June, on the full moon to the high on the new moon comes in at 1299. And that's what I think we'll probably hit that in a matter of just a couple of days, if not today. We're only 6 points away. We're already down 25 points. So it's very easy for it to go there, and it could go all the way to the 786 at 1285 too. What I'm watching the most, Jim, is the euro, because the euro and the S&P really have a very high correlation, and the euro is acting much more bullish than the S&P is, which is telling me that there's not a lot of panicking out there. We came within 6 pips of the exact 61% retracement on the euro so far, and so that's what I'm watching. I'm watching the euro at that 124.65 level, and I'm watching the E-mini at that 1299 level.
If you have a chance, can you pull up your chart again? Because I thought the 61% is closer to 1294, and I thought we're right here at the pivot at 1306.
Well, I tell you what I'm going to do. I'm going to clean it up a bit so you'll be able to see it a little better than what I have originally. And then I will just put this into Tiger TV so everybody can take a look at it. But I'm pretty sure that the numbers are correct, and you'll see that it comes in at around 1299. That's what it looks like to me, is it will come in at the 1299 level.
Okay, and then like yesterday, I think last week somebody asked you, you would look at the chart and the patterns rather than sticking to say that the Bradley would be looking for a bounce.
Oh, absolutely. The first thing that I look at are the ratios. The ratios are this is my shield, my sword of Demosthenes or whatever it was. That's what I really look at first. The second thing I look at are the patterns, and then the third thing I look at are the astro points that we have, like the Bradley, and then the full moons and new moons and combust and things like that.
Okay. That sounds good, Larry.
Hey, thanks for calling in, Jim, and I hope to talk to you again soon.
Have a great one.
You bet. Okay, folks, got to take a break, pay a few bills. 877-927-6648. 10 more minutes to go. Don't miss a chance to talk to Marlon the Magician. He's not here, so I'm taking his place today.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Oh, you know what I did, folks? Uh-oh, I have a very bad thing happen. I turned off my microphone because I was taking a drink of water, and I was talking, and I didn't get anybody any response, so I apologize. We got a caller from Philadelphia on the line, I believe.
Hey, Larry. John here.
Hi, John. How are you?
Good, thank you. Hey, I wanted to ask if I can have you elaborate on your dollar-yen idea. I see in the newsletter you put on a short. You're in the money. Currently, that yen is 79.60 or so. On this trade, will you actually be gaming to cover way down there at 77? And if so, how does that line up with the idea that you'd been looking to buy the dollar-yen for the past year and a half, on a longer-term basis?
Well, on the longer-term basis, we were trying to buy it when it was down around 73, and all we've done now is have a big AB equals CD correction. That's really all that's happened.
Yep.
It's been just a pretty good. In fact, we've had a really nice run here for a few weeks, and that's all I was saying is the market's, still in a downtrend. We just finished an AB CD move, just absolutely, in textbook fashion. When you look at it on the dailies.
Yep.
Went right up to perfect ABCD, and that's all we're doing is just trading, against the trend here. And if it pulls back down some more, I'm still bullish longer term. But I try to trade these things.
Sure.
This is a business of making money. It's not a business of being right or wrong. I don't listen to the news or read the news. I don't know why the yen's getting hammered today, but I'm glad that it did. As far as the trade, there's no way anybody could have gotten that trade on, because by the time the newsletter went out this morning, this thing hit at around 4:30 or 5 o'clock Sunday afternoon, New York time.
Right.
And so, you never had a chance to be in that unless you were in Friday. And, we talked about it on the Commodity Show on Thursday.
Yep.
With that 3-drive pattern. But if you were not in there Thursday or Friday or Sunday night, you wouldn't have been able to get in. But when I write the newsletter on Saturday, I don't know what's going to happen on Sunday. So
yes, right.
What I would do now is, if you missed it, is, sell if it gets a, 61% retracement back over the next day or so, I would be willing to sell that with the stop above the 81 level.
Gotcha. Now, and let me just ask one last follow-up question. If in fact dollar-yen declines down, I think the low was down there, I'm just looking at the chart here.
75.
And more recently it got down to like
77 and a half.
Yeah, exactly.
Yes.
Are you expecting that if it should decline to that you'll be looking for buys with the idea of targeting a rally back up to 84, 85? Is that kind of what you're thinking?
Actually, John, I might hope to disappoint you here, but I really try not to expect anything, because all of our frustrations in life and in the market come from unfulfilled expectations. So if you don't expect anything, you can't be disappointed. That's true of. No, I'm serious. That's true of your kids.
I hear you.
I learned that from Tony Robbins, and I like Tony, and that's one of the best things I ever learned from him. Hey, thanks for calling in, my friend, and I hope to talk to you again soon. May God bless everyone. See you later.